Your 401k is one of the best and most effective ways for you to start investing, even if you don't have a lot of money. But the biggest question is, what should you be investing in? Vincent Chan here from The Simple Dollar, and in this video, we're going over how to pick your 401k investments, a step-by-step guide. And if that sounds good to you, make sure you smash the subscribe button to always stay up to date with the latest and greatest from The Simple Dollar on money and personal finance. Listen, I completely understand there's a ton of different acronyms and numbers within your 401k plan. It gets really confusing. That's why you should stay until the very end of this video to truly understand how you can avoid making poor investment decisions within your 401k. Before we even get started, the first tip I can give you that can separate you from a ton of different retail investors is to view your 401k plan not as an isolated account, but as part of your entire investing strategy with all your accounts. That means you don't have to plan your entire investment strategy within just a 401k account, and instead you should be viewing it and summing up all the investments you have across all your accounts. Which is really great news for you because your 401k plan most likely has very limited investment options. Some of these investment options could be really positive and some could be really poor. For example, there could be a really fantastic US total stock market fund that you can invest in, but then on the flip side, there's a poor international fund that you can choose from. So step one is to actually create an overall investment plan, and you can do this by first laying out all your investment objectives. Firstly, ask yourself how much money you're going to be actually putting into this account, and remember the contribution rate that you actually put into this account is probably one of the most important factors, so you definitely want to tie this out before we even continue. Secondly, which account should you actually use? The rule of thumb is to actually contribute up to the employer's match with your 401k plan, but afterwards there's a couple of other retirement accounts that you can choose from. So firstly, you want to decide which accounts you want to invest in, and then from there you want to decide a contribution rate that you want to give for each account. And thirdly, you want to determine what is your target asset allocation, meaning are you more interested in investing in US stocks, in international stocks, in US bond, and etc. After you figure this out, you want to understand exactly how much money you want to put into each of these segments, and check out the video description down below for some actual sample asset allocation recommendations that we have at The Simple Dollar. Step two is actually review your 401k investment options. And you can do this very simply. You can either log into your online 401k plan, or you can go to your employer and ask for the different investment options that your 401k plan offers. So after you have the list of investment options with your 401k plan, there are two factors you want to check out. The first one is, do these options actually align with your target asset allocation? And if it doesn't, then feel free to ignore it. Secondly, you want to look into the costs and fees associated with each fund. And if the fee is really high, then we actually recommend you to avoid that one, because cost structure is probably one of the biggest predictors of future returns. It's very likely that your 401k plan offers these things called target retirement funds, which is basically composing of mutual funds that comprises of other mutual funds that reallocates by itself based off the target retirement date that you pick. So for example, if someone chooses a target retirement fund of 2060, what that means is that they're expecting to retire by 2060. And as we get closer to 2060, the funds itself would actually start readjusting by itself and take a more conservative approach. So let's say it'll have fewer allocations into stocks and more allocations into bonds. These target date funds can be a really simple option for you because you pretty much just pick one fund and you can set it and forget it. However, we do recommend you to double check what are the fees and costs associated with your selected target date fund and whether or not the asset allocation actually makes sense for your investment strategies. For example, let's say you're planning to contribute $10,000 across all your retirement accounts and you want to put 50% or $5,000 into a US total stock market fund. If you found a good investment opportunity within your 401k plan for a total stock market fund, what you want to do is allocate that $5,000 into that US total stock market fund. However, if you contributed less than $5,000 to your 401k plan, then you would only max out to whatever balance you actually decided to put into your 401k plan. If you have money left over after maxing out your fund option 1, and in this case it is the US total stock market fund, what you want to do is move down to your fund option 2 and so on and so forth until you use up all the 401k money that you have in the account. The next step is to fill in any gaps using your other investment accounts. If all your money is in your 401k plan, then congratulations, you're pretty much done. If not, then you can start filling out your investment options with your other retirement accounts such as your IRA account. The reason we save this step for last is because chances are your 401k plan investment options are limited, unlike your other accounts such as your IRA retirement account. This way you can make the most out of your good options in your 401k plan, and then from there on you can fill in the other investment accounts. And lastly, you should always remember to revisit and rebalance your 401k allocation, because as time progresses, your investment in different allocations will rise and fall as the market progresses. So it's a good idea to review and readjust your 401k investment options annually as time moves on. As always, thank you so much for watching. If you have any questions or comments on this content, remember to leave a comment down below and we'll get back to you as quickly as possible. And remember, if you want more content on money and personal finance, remember to smash that subscribe button and ring the notification bell for more content. Vincent Chan, signing off.